do. Get everything pulled up here, and I think we are good to go. What is up, everybody? Hey, what a fantastic day. What's up, everybody? Welcome to Own the Chaos. My name is Brad. There is no fat man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you guys own it. And how crazy has it been this week? You know, the name of this channel, it's just genius. I'm just gonna pat myself on the back here because it is so crazy and chaotic. And we definitely are here to help you own it. And own it we have, ladies and gents. Own it we have. Before we get into everything that we have going on today, we got plenty of good earnings. We got FedEx, Adobe, Stitch Fix on the docket for today as far as earnings after hours. Also got a lot to talk about as far as this market dip. Are we done? Is this it? Do we buy the dip? What are we buying? I'm going to go over all that stuff. Before we get into that, though, let me hit everybody up with starting five. Sean Ethier, Savvy Money Show, Beka Twoon, Paraj Juneha, and Ayushi Juneha, husband and wife. They're always rolling around in here. Appreciate you guys coming in early, and you are my starting five. That being said, the market's been crazy, right? I mean, just an unbelievable day today after an abysmal day yesterday, and it's just been crazy. But I made some moves today. I said yesterday, I sat on my hands. I was waiting for the dust to settle and figure out what the plan was and where am I going to start putting this money that I have on the sidelines to work. And I did that today. I'll let you guys know what I did. But first, let me let you know what the channel today's show is brought to you by, and that is, of course, the Chaos Crew. If you guys are not part of the Chaos Crew, if your name is in gray in the chat, there's a possibility that you might kiss your cousin a little. Just saying. You might not, but there's a chance that you do. And people might think you do. So if you hit the join button next to subscribe, you can turn your name green and people won't think that about you anymore. Nevertheless, the channel has been brought to you by the Chaos Crew. If you guys hit the join button next to subscribe, you can help support the channel and everything you see behind you. We can still dish out amazing content for you guys, answer all your questions, all that good stuff. And we give you something in return. We give you a watch list every single day of the week. If you're a part of the Chaos Crew, we put out 5 stocks that we think might be moving in the market. And just to give you an example, Monday, we talked about Cleveland Cliffs. Everything obviously fell off a cliff. And Cleveland Cliffs, I said the stock was down 8%. This is straight from the watch list on Monday. Stock's down 8% this morning and will open up well below the bottom of its trend. This would normally be a cause for concern, but yet again, nothing has changed with this company fundamentally. And I said that I really like this, coming down to the 200-day moving average. It's likely that it would have come down to that. Sure enough, it did today. And it just had an amazing bounce. I have calls on this in 2 different areas in this stock. And let me just show you real quick. The movement on this has been incredible. I'm going to bring you to the daily chart. And this purple line is the 200-day moving average. Sure enough, it came down and tested that today and bounced beautifully. I have calls on this 23 strike. It's all the way back out to the end of October. And then I got $20 calls this morning when I saw that bounce off of the 200-day, and they are paying off amazingly well. This has actually made a huge comeback. The 5-minute chart on this today is just a textbook cup and handle. I mean, just beautiful. It looks so good. And that was just one example, folks, of one of the stocks that we put on the watch list every single day. Do we get it right every single time? We don't, but we get a lot right. And I would say that we're right more than we are wrong. And so for $4.99, we can give you that watch list every single day. So you want to help support the channel, we'll give you something in return. You also get access to our Discord group and all kinds of other goodies. But, the watch list is what everybody likes. So if you guys want to hit that join button, we certainly would appreciate it. Yeah. Just checking in with the chat here. wasn't just DraftKings. I see that Tim in Michigan said that DraftKings pulled down your favorite pen today, and it wasn't just pen; it pulled down a lot. We'll talk about that in a sec. And because I saw Rudy Brown. Rudy Brown also asked, "You mad at me, bro?" I don't know. No, I'm not mad at you. Um, but you know, let's get into it. We'll talk about this. What's going on with this DraftKings deal and every. So DraftKings is down. Really, all of casinos are down, and I think this is more or less as a result as a result of everything coming down from yesterday. It's just carrying over into today. FanDuel and DraftKings are dominating U.S. online sports in the sports betting market, but we still like Penn. We still like MGM. I would say that DraftKings, FanDuel is number 1 and 2 still, and and DraftKings is working their way into the UK markets. Let me just pull this up. I'll get the article pulled up here real quick. They came out with a bid for Etain, and looks like they're going to be partnering with each other. DraftKings is. They made a bid worth $20 billion for the space. Here's why it sold off. Okay, we've seen this a lot of times in the past, and let me share my screen with you guys real quick so you guys can see what's happening with DraftKings. It's down 6.5%. Pretty tough day for DraftKings. Sorry guys, I'm still getting over the Ravens game. I've lost lost my voice yesterday. It's a little bit better today, but not quite 100%. But DraftKings sells off because this $20 billion bid is too much, I think. I think it's too much for Etain. Will they get their money back? Eventually they will, but it's going to take a while. And here's one thing to consider. DraftKings has been spending money so, like just an insane amount of money to where, when's enough going to be enough? Are they going to be able to actually turn a profit at some point? And this is why I love Penn. DraftKings is definitely going to be something that you want to own if you like the sports betting world. But I prefer Penn National because they don't spend more money than they need to. We have the Barstool, the Barstool crowd. We have a Dave Portnoy. They have access. There's over 75 million stoolies in the Barstool community. 75 million. So why do you need to spend all kinds of crazy money? I mean, we've seen, and you guys have probably watched football games, even last night, watching Monday Night Football. There was DraftKings ads, there were MGM ads, there were FanDuel ads all over the place. You didn't see one Penn ad, and there's a reason for that. They're not spending money needlessly. They have a whole community to leverage to that they don't need to spend money on. They're doing all kinds of good stuff over there. And this is kind of one of the drawbacks to DraftKings is that we have no idea when they're going to be profitable. No clue. Not a clue. And this is a prime example of growing at all costs. Sometimes it works. I would say rarely it works, where you just grow at all costs and I hope that eventually you'll become profitable. Just spend, grow as fast as you can, and then the money will come later. That philosophy, in my opinion, just isn't. How do I explain this? It's one of those things where if you do it right, then maybe you have a chance of it working. If you do it wrong, you have zero chance of it working. I mean, WeWork is a prime example of that. WeWork, when they went to IPO, everybody saw just how much money they were losing hand over fist, trying to grow at all costs. They were spending money out the ass, and the IPO failed. Didn't even go through. You had their CEO spending $60 billion on jets, or $60 million on jets, and going all over the place. Meanwhile, they're going like crazy, and their losses are doubling while they're growing at an exponential rate. And it's just like, well, something's wrong here, And so I think that's the trap that DraftKings is falling into. And I get it. All right. I get it. You're looking for opportunities to grow your market share because once you have all the market share locked in, that's it, done. But the thing of it is that Barstool already has a huge market share. And while we're still waiting for the sports betting side to kind of start scooping that up, and they will, It just takes a little bit more time. They're two different strategies. I prefer the one that Barstool and Penn National are taking versus just toss up money at things and hoping that it works. If Jay Snowden is watching, I would love to have him on this channel. I know he's not watching, but I saw him on Benzinga, and I feel like this channel is just as big as Benzinga is. Jay, there is no bigger fans of Penn National than us here on this. Somebody share it. Somebody share it. Tag Barstool and Penn. We'd love to have him on the show just to pick his brain. But anyways, that's why DraftKings is falling. That's why really it's carrying the rest of the market down as well. And let's not forget, we're still kind of navigating through the issues with Wynn and Macau. All of the casinos are down. It's not just them. Rudy Brown earlier in the Chaos Crew asked about GNOG, why this is down, because they had a pretty good catalyst. Same thing. It doesn't seem like it matters what catalyst is going on today in the casino side of things. They're just not doing well because the whole industry is down. Genius Sports wins official data, and then trading partnerships with Golden Nugget on online gaming. This is a big deal for Golden Nugget, and I think that it's going to be big. Eventually, people will warm up to this idea. Rudy Brown, anybody else who's watching, interested in this, I think that we're definitely looking into. This is a good thing for the company. And for GNOG, but it's just down. So what I would do if it were me and I was interested in taking a shot at GNOG, I would probably use this as an opportunity, because this is a great thing for the company. This is a great thing for the industry, and the whole sector is just down. So the company hasn't changed fundamentally. It's down 7%. This is an overreaction if I've ever seen one. So I think that looking at your favorite gaming stocks, if they've been beaten down and you still believe in them, and you're looking at this as a short-term issue, then I think that these are all going to be good ones to play with. Boogaloo Brown, what's up, bro? What's up, Boogaloo Brown? Yeah, man. So Boogaloo Brown says, how about the Lucid crew? If you guys recall, last week I took shares and calls on Lucid and made out big. It is still rocking and rolling. Says survived yesterday and moving on today. It was one of the very few green stocks yesterday was Lucid, and it is still rocking and rolling. It's up almost to $27 a share. It's up 11.5%. It hit $27.93 earlier today, and what an absolute monster this thing has been. We knew it had it in it. Admittedly, I took profits on this. I'm no longer in it as of yesterday, but I say this all the time. You just have to take profits at some point. And I did. I got in nice and low in like $20. So I feel really good about the taking profit on that. And I used that to put right back in the Cleveland Cliffs, which, as we can see, also did really well. So I'm feeling pretty good about it. Let's pull this out to the 5-minute chart. Doing pretty well. So I ended up, making out today. I feel pretty good about that trade-off. All right. So Savvy Money Show says, please pen to 100 first. Yeah, that would be nice, wouldn't it? That would be really nice. Just checking in. Brian says it's crazy that this show isn't more popular. I appreciate the love, Brian. I appreciate the love. All right. Let me get into a couple other things. I want to get into what we talked about yesterday. If you guys recall yesterday, I had mentioned a few stocks that were worth, and a few areas that were worth buying the dip on yesterday. And I had mentioned specifically, I should have brought the clip up. I should have just done it. I thought about it. I was this close to bringing it up, and then I didn't. But specifically the travel side of things, Epicenter and energy. I talked about those. The two specific stocks that I mentioned in the travel industry, the travel side of things, was Disney and Airbnb. Yesterday, we saw a huge drop off in the overall markets, right? The Dow was down 900 points, and we saw a massive correction, intraday correction, I should say. Guess what wasn't green? Guess what wasn't red yesterday? Airbnb was red. The airlines were green. Delta was green. Spirit Air Systems was green. The travel industry is starting to move, folks, and Airbnb is up 5% today after a pretty decent pullback. It was like it didn't even care about yesterday. It just hit 170 about 20, 30 minutes ago. And travel's back. The travel restrictions got lifted by the Biden administration for international travel. Not lifted, but they got loosened. And this is one of my biggest convictions, one of my biggest positions personally. I have 120 shares of these in the Own the Chaos Crew account. So if you guys hit that join button, you can get access to this account and see what I'm in. And whenever I make the moves, you'll get those alerts in Discord. So hit the join button next to subscribe if you guys want to be a part of that. But this is something that I am super proud of. I stuck with it, and my conviction, and despite some ups and downs, has been paying off. Yesterday, I said Airbnb would be one to get into and to hold, and it is rocking and rolling today. It's up 5%. And this is something that I think is going to continue to go higher. We saw this, hit 170 ish a few days ago before the strong correction. And I think we're going to continue to go higher from here. The next area of resistance is going to be around 175. But this has been a massive move today. And I feel really confident in Airbnb. The one thing that I will say about Airbnb is that from a PE standpoint, it is overvalued. If somebody's looking at this, an analyst looks at this and says, man, it is trading so much above its PE ratio that this is crazy. How's this going to grow into its valuation? The fact of the matter is that it's happening. It's going to happen. We're in the middle of a record month for Airbnb, and it's not stopping anytime soon. Demand is going through the roof in travel, and people are spending money like crazy. And I'm going to continue to bang my fist on the table about this. It's not slowing down. There is a thing called revenge spending, and it is happening right before our very eyes. Just go to any retail store. Things are selling out like crazy. People are buying stuff all over the place. People want to get out. They want to travel. It doesn't matter what time of the year it is. And we're seeing that with Airbnb. Here's the other thing. It's not just about travel. If you are now somebody who works from home permanently, which we are seeing more and more of, why can't you just go rent an Airbnb at a destination of your choice and work from there? And you can. And we're seeing it all over the place. So Airbnb has made mention of this, and this is a trend that's probably going to continue. I love it, guys. I love it. The stock looks great, and travel in general. Disney's the same way. Disney, had obviously a pullback with the rest of the market yesterday. It's down just a little bit today, but I do believe that Disney is going to be something that you may want to consider taking a look at on this correction. If we look at Disney, and it looks like it has a pretty strong support here at 167, this is another travel stock that got murdered by the pandemic because they had to shut down parks, and that's their biggest revenue driver. Thank God for Disney Plus. But now you have Disney Plus and the parks opening back up, and this, in my opinion, is a steal. If Disney comes back down to this 166, 167 area, I think this is going to be a good one to grab up as well. So the travel stocks in general are going to be something that you may want to consider taking a look at if you guys are thinking about what corrected over the last couple of days that has given me an opportunity. Disney, Airbnb obviously has been on a roll, but Disney now, with it being down 3.5% today, I think this is something that still very much on sale. All right. So some moves that I made today. I've been playing this option game. You guys know I've been, for the longest time, for 4 years on this channel, I've just traded straight up shares. Never wanted to mess with options. I was like, I just don't want to take on that kind of risk, mainly because I hadn't traded them in forever. Before, a month ago, I hadn't traded options for 10 years. So like just my familiarity with it wasn't there. I was like, I'm just going to stick with what I know. I know what works. I decided to make a little bit of a change and wanted to give them another shot. So I got some calls today. I already talked about my Cleveland Cliffs calls. I think that Cleveland Cliffs, with it being the strong overreaction to the Chinese news, is just that. It was a strong overreaction. So I ended up getting some Cleveland Cliff calls. I think that the infrastructure bill is going to work wonders for materials and in general. Cleveland Cliffs, one of the very few steel makers in the country, I think will stand to benefit. And so I got some more calls in Cleveland Cliffs. That's worked out. I'm up 30, 4% on those calls on the calls that I bought today. Still down on the calls that I bought out earlier in the week. But I have 23 strike and $20 strike on Cleveland Cliff calls there. Next is going to be Facebook. I bought some Facebook calls today on the sell-off. This has already started to move up. I think Facebook, the FANG stocks in general, with their pullbacks, gave me an opportunity. So I ended up taking some Facebook calls, just a couple of them. 360 strike, October 15th expires, and I think that those are going to be good. So those are the two major ones. I also sold my Affirm. I stopped out. I had this might come to a shock to some people, but I've been in Affirm since $61, and I decided to take my profit. I've been scaling out of that thing all the way up to as high as 120, and it's up to 109, but I had to stop at 104, 104.50, and it tripped today, and I decided to just let that go. I will be back in Affirm. I'm sure that we'll see some pullbacks on that. If not, then I'm not going to complain about 100% gains that I had on that thing. $61 a share was my average, and I've been scaling out all the way up, and I sold into as high as 124. I had about 50 shares left, which is a little less than half of my position, and I took the rest. And started buying some options with it, and feel good about it. If it continues to roll, somebody else can have it. That's cool. That's a thing that you have to really discipline yourself and get into that mindset of just being like, hey, I made a shit ton of money on this. It's going to keep rolling without me. So be it. If it's going to keep rolling without me, so be it. I got to take my profits and move on to the next one, because there's always something else to trade. So, African Emporium, Willis, what's up, man? Appreciate the donation. It says, sounds like you need to sign up for my mentorship on options, pal. I'm up about 13K in 17 days. Bro. Yeah. Willis has got options mentorship within our WeTradeHQ platform too. So go to WeTradeHQ.com. You can sign up under him. Willis is such a good dude. Appreciate you, brother. Thanks for tuning in, man. Haven't spoken to you in a minute. We still gotta go fishing, bro. That's still gotta be a thing. But thanks for the donate, bro. I appreciate that. All right. So we got about 8 minutes before the close, and we got earnings today. Earnings today are FedEx, Adobe. We do have Aurora Cannabis. If you guys want to take a look at that later this afternoon, we can. I didn't really have it on the docket to watch for, because I can't stand that company. But it does move. Okay. People are crazy about that stock for whatever reason. It's the worst weed stock, in my opinion, to own, because all they do is dilute, and then they reverse split just to stay into the NASDAQ, and then they dilute some more. And they make you guys pay for it. So that's why I hate anything that has dilution like that. It is a vicious cycle. But there's Aurora, then there's also Stitch Fix. So a couple of interesting things. We got FedEx on the docket. Let me show you guys the FedEx chart. And it's been rough for FedEx, okay? It's been really rough for FedEx. It is one of those stocks that I think actually could be worth buying the dip on off of the crazy correction it's had. So they've been running into some issues with some supply issues, and just really being able to keep up with demand has been a struggle for FedEx. They ended up announcing that they are raising rates for 2022, and the market isn't really responding all that well to it. It is just barely green today. I would say that this is actually a good thing for FedEx. It gives them an opportunity to increase their margins. They're feeling the inflation side of this a little bit. They mentioned that they're in a challenging operating environment, and I don't know. It'll be interesting to see how this all shakes out after earnings and what they have to say as far as earnings are concerned. But I still like FedEx here. I think this is actually going to be a good opportunity, especially leading into the end of the year. This is going to be the biggest time of the year for FedEx, UPS, and we should get a decent outlook from them as well. Their expected earnings per share are $5 on the dot, and I think that they should very handily beat that. I don't see how they don't beat that. The only thing that's going to bring the stock down is if they come in and give us not so great guidance. I don't know. I don't know. Obviously, the selling has continued to, you know, take place here, and we haven't seen 1 ounce of a reversal since the correction and them falling out of this trend. But maybe today is that catalyst that kickstarts it. Sitting at 252 from its $319 highs, so that's around 30%, give or take. And I think FedEx could be an opportunity here. We'll see. Before we get into some of the other ones, let me just check in with you guys. We got 92 of you guys hanging in the stream. Certainly appreciate you guys hanging around. Got 49 likes. Let's try to get that up to 75. And maybe we'll get to maybe we'll up that if we get into earnings and we start seeing some more people showing up. All right. So yeah, Stitch Fix is another one that's reporting today. Interesting. This will be the first quarter that Stitch Fix will be reporting without their founder. They had their founder, the founder, I should say, of Stitch Fix, which is Elizabeth Spaulding, one of the very few female CEOs of a $1 billion company. I think she was one of the first ones that IPO'd a $1 billion company. One of the first owners, one of the first female owners that IPO'd a company over $1 billion, and which is obviously compelling. But she stepped down last quarter, and now they have a new CEO. And it'd be interesting. It's been wild for Stitch Fix. If you guys recall, depending on how long you've been around, I called Stitch Fix a buy at $16 a share at the bottom of the market when the market crashed, when COVID hit, and this thing went crazy. Went from $16 all the way up to $113. I wasn't expecting that kind of move, but I definitely thought it was undervalued at $16. It was underrated. And this has continued to really make a strong move. Since then they've been dealing with a lot of supply chain issues and obviously issues with shipping, which goes along with what FedEx has been complaining about, had complaints about, or pain points for FedEx. And we'll see where this goes as well. Their estimated earnings per share, let me get that pulled up. Estimated earnings per share for them is oh, that's not right. That's Adobe. Hold on one second. I have Adobe's pulled up too. I was like, I looked at that and I said, that's not right. That's not right. Let me get Stitch Fix pulled up. And I'm hoping that I got my folks in here with me too. I hope Arfin's in here. Will help me give me a hand on some of these earnings. But a loss of 13 cents is what's expected from Stitch Fix. So if they come in higher than that, that would be great. I would be very skeptical on holding Stitch Fix through earnings. If this does sell off, maybe it'll give you a good opportunity. See if it comes back down to $29 a share, which looks like it could be its next support if we do see a sell off from here. It's already down 2% right now. We'll see where it lands after earnings come out. So we'll be watching that one too. Then there's Adobe. Adobe has earnings today. Their estimated earnings per share is $3.01. This thing just continues to rock and roll. Cloud computing, the cloud space, this continues to help out those who are moving towards a permanent work from home environment, which we are seeing more and more of. Adobe has come out and had massive upgrades to their guidance. If they do it again, I mean, my goodness, can you imagine? It's at $646 right now. I mean, a split would be nice from them too. So I think the one that I'm most excited about personally is probably going to be Adobe. So we'll see. Let me know which ones you guys are looking forward to. C-Buck says fishing. Now we're talking my language. Thanks, man. Yeah, I love to fish. All right. We can look at, I'll pull up Aurora Cannabis as well. Here's the thing again about Aurora Cannabis. So they have earnings after hours. I don't know what their estimated earnings per share are. It probably won't matter. What people are going to be looking for is revenue here. But one thing that you really need to understand about stocks like this and let's zoom out for a little bit. So you can see it went from 1968, just May of last year, then continued to bleed down all the way to $3.71. That has everything to do with something called a dilution. If you guys don't know what dilution is, it's essentially, dumping shares into the market. If a company doesn't really turn a profit, or they're not making enough sales to support the business, they have to be able to raise capital some way. And some companies take the route of selling shares to lenders, to a bank, for example, just to make it as basic as possible. So if I'm somebody who owns a business and wants to sell shares of my company, or equity of the company, to a bank, to in exchange for cash, I might do that in any form or fashion. There's right ways to sort of go about doing that. I don't really like saying that, because I don't think there is any good form of dilution, but there's better ways to go about doing this than not. In my opinion, Aurora Cannabis losing money like crazy, and they continue to just dilute. So they're selling shares like wildfire, and then they just authorize more shares to sell. To these banks. So the bank says the par value of these shares is usually like fractions of a penny, or maybe at a penny. So the bank, they're instantly making money off of this. It's not like they have to wait for the company to pay their interest on this. They can instantly start diluting in a lot of cases, and in Aurora's cases, and for the most part, this is the situation where they have par value of these shares at around a penny or a dollar. I think it's around a penny. Some of them even, like I said, fractions of a penny, 0001. It's wild. They get shares in exchange for cash. Then they sell the shares directly in the market, because at that point they're instantly profitable, and it just continues to dilute the stock. In Aurora Cannabis's case, they've done this repeatedly, to the point to where they were in danger of being delisted from the NASDAQ. And you can see this. This is very evident. The stock, they would reverse split right here. Stock goes crazy, then sells all the way down to $3, and then they just do it again. Then they just reverse split again. Why not? Let's just screw over our investors even more. And this is why I can't stand companies like this. This is why I don't like Aurora Cannabis. I think there's a lot better ways to go about running a business than something like this. And if you want to get into the cannabis industry, look at something like a CGC, Canopy Growth, who has a backing of Constellation Brands. That company owns brands like Molson, or not Molson, Modelo's, household brands, household names. So something like that makes sense. That company's not diluting its stock like crazy, not like Aurora Cannabis is. So not like Tilray is. Cannabis industry has a long way to go still, especially from a legislative standpoint. And as long as they continue to dilute, its stock's going to continue to just get beat down. It's not going to be worth holding long term. Checking in with you guys. Donna says she's looking forward to Stitch Fix's earnings the most. Danny Alvarado says once Google or Amazon announce a split, hopefully next year, go all in on calls. Yeah, no kidding. What's your price estimation for NVIDIA next year, or end of this year? Says Overwatch Grandpa. Appreciate the question. Let's take a look at NVIDIA. I think right now, if we see this bounce off of, we see this is bounced off a 50-day moving average after the correction. The rest of the market kind of moved down. So I like this up over. I think this probably breaks all-time highs, up over 230 by the end of the year. Easy. All right, let's check in with some of the earnings right now. Stitch Fix is down after hours, 1.3%. FedEx is also moving down after hours. It's down 3.5%. And as soon as I get those numbers, I will certainly get them out to you. So you have to give me some time here, and I will get those pulled up. Feel free to throw them in the chat if you guys have them. But I'm going to start searching and seeing what's up with some of these stocks as they start coming in with their earnings here after hours. Again, we have FedEx, Stitch Fix, Adobe, Aurora Cannabis. And let me pull up FedEx first. Still waiting on those numbers. Here we go. FedEx quarter one adjusted earnings per share $4.37. They miss on their $5 estimate. Wow. Sales are 22 billion. They beat that estimate of 21.91. That is tough stuff for FedEx. So they missed their earnings per share. I'm guessing a lot of this has to do with their increased costs on shipping. That's crazy. Let's go ahead and pull the chart up here so you guys can see. That is wild. So we're going to pull this out to the 5-minute chart so you can see what's going on right now. But they missed. They missed their estimated earnings. That is wild. FedEx misses. Sucks. That sucks for FedEx holders. But this may be, they also cut their guidance. Damn, no shit. FedEx cuts their guidance, estimated guidance before month over month was, let's see here. Their expenses are going up. So they decreased their guidance because of the expenses. We talked about that earlier in the show, that could be a problem for them. I'm surprised that they missed earnings as a result, though. That's pretty wild. Don't look now, but Stitch Fix went from red to green here after hours. Let's see what's going on with Stitch Fix as well. Tough stuff for FedEx. Stitch Fix reported earnings of 19 cents after the consensus was a loss of 14. That is crazy. Hell yeah. Stitch Fix is going the hell off. I mean, that is a giant beat. Are you kidding me? They came in positive. Wow. Stitch Fix is going off. Giant boner candle from Stitch Fix right out the gate. It did pull back, but this is still rolling here. Well, this is nuts. Wow, what a move out of Stitch Fix. Whew. Anybody get into Stitch Fix, by the way? Donna was excited about Stitch Fix. She got big reason to be excited now. Jo say that's all me. I just got my Stitch Fix order today. Hey, I got Stitch Fix too. I partake in Stitch Fix. I love Stitch Fix. Great service. It's a great service, especially somebody who is like me that works from home a lot. I come into the studio, but I'm not going out shopping or anything like that. I love it. I can't dress myself. I really can't. I trust the people at Stitch Fix to dress me because they know how to dress me better than I can dress myself. Okay, earnings for Adobe reported earnings of $3.11. The consensus was a $3.01. $3 is what I had. And so it is. Let's go ahead and check out that chart here. It is down 4%. Looking to see why it might be down. It could be due to guidance. As soon as I have a reason there, I'll certainly give it to you. But yeah, so Stitch Fix, Donna Lindsay is in Stitch Fix. So hell yeah, Donna. That's still rolling, by the way. Still going up. It's up 7% now. After having a huge spike to $41. Wow. That is pretty awesome. So far, if you guys are just tuning in, we went over earnings from Stitch Fix, Adobe, and FedEx. Doesn't look like Aurora's is out. We might not hear from them. Because they're a small company. We might be waiting a minute for Aurora Cannabis if anybody's actually interested. But Stitch Fix came in and beat monstrously on earnings. They're expecting a loss per share of around 14 cents. They came in positive. I want to say, what was it? 19 cents, 16 cents, something like that. So either way, they came in positive. And this thing is rocking and rolling now. So pretty good stuff from Stitch Fix after a tumultuous, last 2 quarters. Looks great. It looks great. It looks like, maybe they've been able to, I guess, overcome some of the supply chain issues that they talked about last quarter and some of the shipping, I guess, challenges that they've also experienced. over the last 2 quarters as well. We'll see what they have to say, but so far so good on Stitch Fix. That seems to be the big winner today. FedEx came in and actually missed earnings. They missed 470 to $5, around $5 estimates, and this is still coming down. Expressing challenges on supply chain, and then also really just work in general. They're having a hard time finding workers. They're having trouble keeping up with demand, and their spending, their spending has gone up. They announced that they're raising rates for 2022, but they also brought down guidance for 2021 because of some of the challenges that they were expressing that they've had to deal with. Adobe can't quite figure out why this is down just yet. Haven't really gotten any news on that, but they did come in and beat earnings slightly. Didn't blow anybody out of the water, but we'll see what happens here. Don't have any recent reports as to why this could be down. It may have something to do with guidance. I got nothing on that one just yet, but those are your earnings so far this afternoon. Stitch Fix is still continuing to roll here after hours, is now up 9.5%. Holy shit. Look at this. It is still going. Now up 11.5%. Congrats to anybody who is in Stitch Fix. I can't even keep up with it. It's up 13%. Still rocking and rolling, guys. I know we got Chaos Crew members in Stitch Fix too. That is awesome. Still rocking and rolling. So it looks like Stitch Fix is the big winner for today. Man. What an unbelievable move. Looks like Aurora Cannabis may be getting some moves here a little bit. Maybe not. Doesn't look like we got any kind of decent volume on that. But yeah, Stitch Fix is still rolling. Look at this. It's up 15% now after hours. Wow. Stitch Fix is the big wiener. People be spending that money on them clothes, baby. They beat on revenue handily, looks like. That is awesome. Also, I think Stitch Fix has pretty high short percentage as well. I don't know what the actual number is, but this could be a good squeeze candidate too. The revenue on Stitch Fix was 571 million compared to 548 expected. So pretty sizable beat. Again, they came in 19 cents positive. They were expecting a loss, or the street was expecting a loss of 14 cents. They came in positive 19 cents. Their revenue looks like their guidance for quarter one of 2022 wasn't higher than what was expected. So that's interesting. But the beat there is what looks like it matters, at least in this case. Pretty big beat from them. Congrats to anybody who is in Stitch Fix. What an absolute monster of a move here after hours. Don Franz says Powell will be the big winner tomorrow. Yes. So we have the Fed meeting tomorrow. We'll see how that goes. Powell's either going to be the hero or he's going to be the zero, one of the two. I guess that's up to interpretation as to which way he goes with this. But I would imagine that he's not going to change a damn thing. And then the Fed's going to do what they're going to do, what they've said they're going to be doing for the last 6 to 9 months and stay the course. So I'm sure there'll be a lot of nervous Nellies out there as far as the Fed's concerned, but we'll be touching on that tomorrow as we hear from them. I'll be live again with you guys at 3:30 p.m. Eastern time tomorrow. It'll just be me again. No Fat Man Zoom. He's still going to be out of town. He'll be back on Thursday, though, with Freddie at 3:30 as well. But you'll have me. You'll have me again. We'll cover some other stuff as well. We have earnings tomorrow, too, I think. Let me just double check on those earnings. We'll cover those if there are. Real quick. Let me get that. Hold up here. Okay, tomorrow's earnings. We got BlackBerry. We got KB Homes, which should be a good one. And that's kind of it. Those are the two that are probably going to be good to keep an eye on. Later in the week, we also have Costco on Thursday. Nike. We'll be certain to cover those too. Earnings season sucks, man. Or No earnings season sucks. It sucks from a creative standpoint. I feel like I have nothing to talk about. Sometimes when I like wake up in the morning and there's no earnings, it's tough to find stuff to talk about when we're live. So thank you, Stitch Fix, for giving me something to look forward to today. Adobe and FedEx can suck it. No, in all seriousness, I think Adobe and FedEx could be good opportunities. Good opportunities to buy. I would certainly be looking at Adobe for as a potential buying opportunity. Fat Man Zoom full accounting Clover today. Yeah, maybe. Ford. I saw a couple of people asking me about Ford. I have Ford calls right now. The expiration on those are pretty far out. Oops. Yeah, I know, Don. I just get bored with that sometimes. It gets boring. I know you know that. He said there's always the education side of things. Teach how this stuff's work. That might be something I actually end up doing tomorrow. We'll figure that out. But leave me some comments. Let me know what you guys actually want to learn about. My Ford calls are for October 22nd. I got 14 strike for October 22nd. I think I'll be all right there. I got 4 weeks. 4 weeks for that. I'll let you guys know if I make any other changes tomorrow and how the account's doing. And I will be back here tomorrow at 3:30 p.m. Eastern time. If you guys haven't done so already, hit the join button next to subscribe. Become a Chaos Crew member. Get our daily watch list, access to our Discord, access to my portfolio and trade alerts, all that good stuff. We are outperforming the market over the last year, which is incredible. 60% of institutions of hedge funds don't even do that, guys. And all you got to do is pay $4.99 a month for it. You don't have anything to lose. Support the channel, support the studio, all that good stuff. We certainly would appreciate it. Hit that like button on your way out. By the way, where are we at on likes? We got 67 likes. I appreciate the support, guys. All right, let's do better, though. All right, we're going to get to 100 likes tomorrow. I got a feeling. Okay. That's going to do it for me, guys. Thanks so much for tuning in. I'll see you tomorrow at 3:30 p.m.